Hi stock investors, JJ here. Welcome back. Well, big news out really. You might have heard that prominent short seller Andrew Left of Citron has been charged with securities fraud by the SEC and the DOJ for allegedly manipulating stocks such as Tesla, Palantir, Nvidia, Twitter when it was Twitter, and others. We'll look at a news item here to see what he's alleged to have done and get into some of the detail about what he did with these stocks. It's pretty interesting and pretty shocking really, so let's get into it.
Talk us through exactly here what the SEC is alleging that Andrew Left and Citron did.
So the SEC and the Justice Department also, they're both alleging that Andrew Left a number of things, but most notably, he came out with calls both to the long and short side, initiated price targets, and loaded up on positions before unveiling that research. The stock would move, and then he'd quickly close the positions to profit very rapidly. So he'd make bets not only on the underlying stock, but also use options, basically saying, at least when you look through the Justice Department press release, saying that he wanted to make fast, easy money using those mechanisms.
Yeah, it's pretty.
Wow, so on the long and short side, using social media to say his position on a stock, moves the market, and then he sells or buys immediately, making money. And it says here that civil suit says 23 companies involved in the trades, roughly $20 million in illegal trading profits he's alleged to have done here. So Left created anonymous websites as well, so a lot of things to alleged here. So let's see what else I've got to say.
It's pretty amazing. He sometimes suggested that stock prices would fall by 50% or more, but then actually closed his positions after share prices had only moved a couple of percents. That's according to the indictment. Tell us a little bit more about Andrew Left, though. I mean, what do we know about him and what's he known for?
He's known for being kind of bombastic. He did actually announce back in 2021 he was on the kind of receiving end of the wrath of the GameStop movement. So he said he was no longer going to make public short calls because he had built out such a vast following with the likes of betting against Valiant, among a broader range of investments that he kind of ended up being right on. But when you look at kind of what he's done and when he kind of started backpedaling 3 years ago, that also was when the SEC and Justice Department started investigating short sellers, some of their relationships to hedge funds. So he's been under the microscope from a regulatory standpoint for quite some time, along with a number of other players in the space.
But it's interesting because he definitely used social media to do it, and it kind of does beg the question whether they're kind of looking at some big YouTubers or possibly doing the same thing. I don't know if that's the case, but it's possible. If you've got enough of a following to move the market and really pump and dump schemes and things like that, I know that they have been looking at things like that. I've seen some videos about that, some reporting on that. But if Andrew Left's such a prominent player in this space and using social media, so this is a new thing to move the market in this way and profit from it illegally.
Some of these allegations have to do with his longs as well, right? It's not all about him being a short seller. And when it comes down to it in the indictment, they're not suing him for shorting stocks. It's really about the way that he publicized his calls and then acted in his own trades.
Exactly. Reading from the SEC press release, they list an example that he said he would stay long a stock until the price hit $65, when in fact, according to the release, they immediately began selling the stock at $28. So coming out with these calls, loading up on positions, basically using his stature on social media, whether that's X or also going on TV and talking about positions, and then quickly profiting from them. According to some of the documents from the Justice Department and the SEC, he basically would put limit orders out. So he would close out those positions even if it kept going or kind of potentially sleep.
So I have looked at this, and we'll look at that SEC document and some of the other documents because it was literally minutes, and he's known for going on TV. He was on CNBC to talk about these things, and when he put things out on social media, for instance, it would just be minutes later that he'd do the opposite of what he said to profit on it. So
parlance of our times, that would be called a pump and dump scheme.
Yes. Well, even more than that, he was setting up apparently fake websites, wasn't he? To what extent did this go to? And is this a one-off? Yes, perhaps they found this because of that short selling investigation, but it doesn't seem like every short seller is out doing this.
No, well, there's a lot of skepticism around short sellers, and that's kind of to Matt's point. Is it misaligned kind of allegations where you come out with kind of this call that a company company should drop 60% and you're going to hold on to that short bet, or do you close out your position when it drops 10%? So when you look at some of the findings, again, the SEC document saying they found these alleged bait and switch tactics that netted left in his firm $20 million. So not only did he have those, according to the filings, those accounts to help promote some of his calls, there's also potentially taking backdoor payments from hedge funds that's being alleged in some of these these lawsuits, that there was partnerships with something around balance sheet.
Is there anything that we can...
Okay, interesting. We're going to have a look at some of the companies. They haven't talked about some of the companies and some of the detail here. We'll look at that in a minute to see what exactly has been going on. I actually remember some of these trades. I remember seeing them on TV, and I remember, seeing them on X and what they were saying around this time. So, it just shows you that consequences can happen from this kind of behavior. And of course, people didn't know at the time what he was alleged to have been doing in the background here.
We can extrapolate out from what we're seeing in this very specific case, these allegations, to the broader short selling industry, because you know pretty well that it seems like it's been a dying breed. We've seen less short sellers. A lot of them have gone underground. What's next?
No, I think that we're going to be closely watching to see if other prominent names that were part of these investigations are going to be facing similar lawsuits, because as you mentioned, it has been a dying breed. You saw Jim Chanos pulling out from short selling and closing that fund. You've seen a number of short sellers who are pretty prominent, either making less calls or just kind of going after smaller companies, whether that's Chinese firms and tiny operating firms that operate offshore.
Yes, there's got a bad rap, short selling. I'm actually not against short selling. I don't do it myself. It's just too complicated. Being long and long term is fine for me. I don't do options at all. But if you look back in history, short sellers have uncovered some big frauds and some small frauds in history, like Enron and Wirecard more recently, Luck and Coffee, I believe. So, I think there is a place for it, but obviously, this is not great for short sellers. And when there's a bull market, short sellers tend to not get so involved, because it's very dangerous to be short selling in a market where it's a voting machine rather than a weighing machine.
As opposed to some of these bigger names when you're targeting the likes of an Adani Corp, which is what we saw with Nate Anderson and Hindenburg. Okay.
All right, let's get into what this story actually is. Short selling Andrew Left of Citron charged with fraud by prosecutors. So if we go down here, we can see federal prosecutors have criminally charged the activist, short seller, and analyst Andrew Left with securities fraud relating to allegedly using his public platform to allegedly profit to the tune of at least $16 million. They said $20 million there from manipulating stock activity. Let's have a look at some of the stocks here that they've said. The company is identified in the criminal indictment, which we're going to take a look at, as ones Left allegedly traded in on ways contrary to his public stances. Their stock is included Nvidia, Tesla, the social media company X, formerly known as Twitter, Meta, Roku, Beyond Meat, American Airlines, Palantir, XL Fleet, Invitae, General Electric, Namaste Technologies, and India Global Capitalization. So a wide range of stocks there that we're going to get into that. We are going to get into that more. But first, let me tell you about ShareSite. I'd like to say that I've partnered with ShareSite as an affiliate, as it's an excellent portfolio tracking and reporting tool, which I use myself. I would not recommend something that I don't use myself, and it's excellent. You can sign up for free here, and there's also a special offer for the premium for my viewers. That's the partnership that I've made. And we can see, if you go to this landing page, and there'll be a link to that in the description. You can check it out. There's a video there that an informative video that you can have a look at there, and you can track your true performance. That's what's good about it. So I have various brokers, 2 brokers that I can automatically bring trades in. Not that I make a huge number of trades, but you can see an accurate representation of your portfolio at any one time, true and accurate, including dividends and all that kind of thing. And you can visualize your portfolio in different ways and track your investment income. So I highly recommend it. And I'll put a link to that in the description. So let's get back to Andrew Left and what's going on here. That's the press release from the SEC, but we'll just go back to this article because it does have some detail that they didn't talk about. And it's pretty interesting. They allege that Left coordinated with hedge funds to disseminate short reports and information that he posted on Twitter. So this, by the way, this video might be a little bit longer because I do want to get into the detail. I think this is really important, and it's not over yet. This is just the start. Obviously he's got probably good lawyers, and we'll have to see. It's alleged at this time, but they would have been putting this together for quite some time and tracking the detail. So he coordinated with hedge funds regarding the timing of publication and enabled the hedge funds to trade in the targeted securities before the reports were disseminated. In exchange for sharing his planned announcements with the hedge funds in advance of posting them publicly, the hedge funds paid defendant Left a portion of their trading profits, the indictment says. And so Left, who lives in Florida, will be in the next several weeks, Los Angeles federal court. Okay, so that's going to be an interesting to follow up and see what's going on there. As his lawyers said, basically, that he ever once published information he believed was not true. Okay, we'll have to see about that in the case as it progresses. All right, we're going to have to see. Here we go. That some of the companies involved. Left's other company, Citron Research, on May 17th, 2019, so this goes back quite a few years, issued a negative tweet on Beyond Meat, which recommended the traders sell the stock and assign a target of $65 per share at the time when the stock was selling at $87. Beyond has become beyond stupid, he said, and we expect Beyond to go back to $65. So despite his negative comments to the market, only 10 days before Left told a colleague that he thought the price of Beyond would increase, stating, "I think Beyond goes to 100, the SEC said in the complaint. Within 7 minutes of the tweet, Left exited the majority of his short position exposure to Beyond Meat, and Citron Research completely covered its short positions within 12 minutes of the tweet. So acting very quickly. That's what they're, alleging, that he's going against what he's been saying in public immediately. Here it says 6 minutes. This statement was materially false and misleading because Left had exited the majority of his short exposure and Citron Capital had already sold all of its short exposure. The complaint alleges 6 minutes after the email exchange, Citron took additional short exposure and Beyond before the release of the CNBC article. So he has been prominent on CNBC. You might have seen him on there from time to time. And so there are a lot of other things here. I went through this and we can see here Tesla. This is Tesla, and there's been a lot of talk about Tesla short sellers. Elon Musk was saying quite a lot that he hated the short sellers. And it says here, let's just look at this because it's specific to Tesla. On or about October 22nd, 2018. So this goes back a long way. In the Left E-Trade account, defendant Left purchased short-dated call options representing more than approximately 235,000 shares of Tesla stock that expired 3 days later on October 26, 2018. And defendant Left posted the following on the Citron Twitter account on the 23rd to promote his long position on Tesla. Tesla dropping earnings on top of F tomorrow night. That's forward. Be a bad sign for shorts. After reviewing all recent info on Tesla dominating its categories, Citron is long Tesla for this quarter, he said. Defendant Left also included a link to a Citron report on Tesla. At the time, Tesla stock was trading at approximately $266. Within 1 minute of announcing Citron is long Tesla for the quarter, defendant Left placed an order to sell call options representing approximately 120,000 shares of Tesla, more than half of his pre-tweet position, for a profit of at least $1 million by the close of the next trading day, or on about 24th of October. Defendant Left said sold approximately 81% of his pre-tweet position for a profit of at least $6.6 million. This trading all occurred prior to Tesla's earnings announcement or on October 2018. Expecting Citron's commentary of Tesla would invite others to question Citron's integrity and to advance the false pretense that defendant Left did not opportunistically trade around the Citron's report. Defendant left stated in the report, "We know this note is going to have many critics, most being our fellow short sellers who might categorize us as opportunist. To anyone who changes the integrity of the Citron, who challenges the integrity of Citron and our constant monitoring of this Tesla story, all you have to do is look at the Citron class action lawsuit recently, blah, blah, blah." So go and have a look at that if you want to. And there's Nvidia there too, and Palantir. I'm going to have a look at the Palantir one. You can see the Nvidia one, but I'm going to focus on Palantir and Tesla. These are interesting that these targeted these stocks. Now, this is as I said, this is a longer video, but I want to get into some of the detail here, which not many people will be looking at yet in videos anyway. On or about the 25th of 2020, November 25th, between approximately 9:04 and 9:58 in the morning, defendant left opened short positions in Palantir and left trading accounts that would generate a profit of if Palantir's stock price declined. In addition to his equity short position, defendant left purchased through the Citron IB account, I guess that's Interactive Brokers, short dated put options that expired the same day. On about the 27th of November at approximately 10, defendant left posted on the Citron Twitter account. Here we go, going to social media. What a run the past month. What a run the past month for all. But as traders looking for short exposure, Palantir is no longer a stock but a full casino. Does not take a ball of crystal to know this will fall back to ADA. Shorting with a $20 to 2020 target at the time, Palantir's stock was trading at approximately $31. Approximately 8 minutes after calling Palantir a casino stock and starting the Citron short, stating that Citron was shorting with a $20 2020 target, defendant left began closing his short positions in the Citron IB account. So 8 minutes later, by market close, defendant left completely closed the equity positions that he had opened in the Citron IB account immediately prior to posting the tweet. At market close on November the 27th, Palantir was trading at approximately $28. The next trading day, the Thanksgiving holiday, defendant left completely closed his short positions on the left trading account. Defendant's left trading around Palantir tweet resulted in profits of at least $820,000, and it goes on. So do take a look at this if you're interested. If you're interested in what is alleged here, what's going on, and what can go on on Wall Street, it's pretty interesting reading and pretty shocking and amazing if it's only alleged at this point, but it seems pretty detailed, doesn't it? So we'll see how it goes. Wow, I think that about covers it for now. I think this is I'll be following this along. I don't know if I'll make any more videos about it, but I think it's important to go into this stuff. And as I said, it relates. If we look at what the SEC said here in the filing here, in the press release, the SEC reminds investors to be skeptical and never make investment decisions based solely on the information from social media and other unverified platforms. And when I say that what I give is not financial advice, you need to do your own work and seek financial advice. I really mean that. And you'll see out there on YouTube, there are a lot of quite big YouTubers who don't do that, who just seemingly give advice and on stock trades, and it's important to be wary of the smaller ones, because some of these big YouTubers can move the stock price on micro cap and very small cap stocks. Because if this seems to be exactly what Andrew Left is alleged to be doing, trading within minutes of putting out the opposite on social media. So this is definitely going to be interesting to follow along on what has been going on here. Now, I'm going to put a link on the screen to what YouTube thinks that you should watch next if you're watching on YouTube. And hi to everybody on Spotify, definitely growing on their own platform. That was actually first on Spotify as an audio, this podcast early on. So I do appreciate the people on Spotify still over there and growing. So as I said, I'm going to put a link on screen to what YouTube thinks that you should watch next if you're watching there. And also subscription link, subscribe to this. And don't forget the share site link in the description as well on all platforms. And thanks for watching and listening. And I'll see you in the next one.